Good day, everyone. Well, as I speak, the S&P 500 is just hitting new highs, new all-time highs, just by a hair. And the Nasdaq's been trading. Well, all of these averages have found their bottoms, and they've been heading higher in this QE environment. We've got really no surprises there. You know, the Fed Reserve yesterday gave no indication of when the Fed's going to start raising rates. The Fed. Janet Yellen is, of course, very dovish, and the view is that they're going to keep the spigot on full flowing for quite some time. And you know, the efforts to keep interest rates as low as possible. The internals are not looking good economically. Things are not looking good in the U.S. or in Europe or in the U.K. for that matter. You can see that there are divergencies that are creeping in where the European bourses are lagging the U.S. counterparts. You also see commodities, gold, oil, silver, etc. Those have been altogether lagging as well, which show that there's a dearth of demand for basic goods. And so, internally speaking, this market has issues. And it's had these issues, and the Fed's hoped to prop the economy by printing all this money. Same with central bankers around the world, and we're seeing a really unprecedented times where you have all this massive money printing going on, which is inevitably, it could inevitably create problems for these currencies because the more you print, the more you devalue, and it's it's issues for people who are trying to trade this market, because we're not getting any real sustainable strong uptrends, and the downtrends don't last very long. So it's certainly not a conventional market by any means. We've found ways to make baby step progress in this kind of environment. What's key there is that when you make your baby steps, you take your profits. And if you keep doing that, as I have my intraday strategy for volatility, but you got to be quick on the trigger there to get all the buy and sell signals, which sometimes you get 2 or 3 a day. But you make these little baby steps, and then you look back after a number of months, and you're up appreciably. And it doesn't seem to matter whether the market's going higher or lower. Intraday seems to be the way right now, but it's not practical for people to be trading intraday, especially if they have normal jobs. So other than that, we look to other means. Pocket pivots and buy-bull gap-ups, those have been working, but you've got to be very quick on the trigger to take your profits in this environment. Don't get greedy, don't get pig-headed. If you've got your 10, 15, 20%, lock it in. If in these kinds of baby-stepping markets, sometimes even 8% is a good trade. And then you got to also keep your stops real tight, because we noticed earlier today when the economic reports came out favorably, the market had the knee-jerk reaction to the downside in about 10 minutes. The market pulled in, and leading stocks, of course, pulled in even harder, which is the nature of this environment. So if you had leading stocks, you might want to take your profits when you see that kind of action. Maybe your profits are only 3 or 4%, but the thing is, we don't know how far down these markets will go. I mean, in this case, it was a 10-minute drop. In some cases, you're going to get a 2-day drop, and we've all seen when our averages go down by 3% or 4% off their peak, the leaders get caned. So if you can get left holding the bag very quickly in this environment. So it requires a lot of dexterity to maneuver your way through these treacherous times. Gil?
Yeah, I mean, basically, Dr. K, it sounds like you're converting to the day trading side of the market, where I've been dwelling for.
Well, I've had my position on actually for a while, since July of 2012.
Okay.
Well,
but you are trading the intraday
volatility.
volatility. Trading it. You're trading some of the intraday volatility. Yeah, and there's a lot of it. I mean, today I think it's a great example, and I'll just tell you guys my story today. I came in overnight heavy long a bunch of stocks. JD, let's pull up some of these charts. and GWPH and Twitter and Grub and ANET and what else? I think that's it. But anyways, I've got big positions in these things, and what I do when I'm running big positions on an intraday basis, and I'm 300, 400% in, the one thing I've learned is I don't want to get caught in a sudden downdraft, and so what I'll do is set trailing stops as things are moving higher. So an example would be, for example, let's take JD. Okay, so if I'm coming into this the other day, it drops back down to the low 30s, so you come into it. But as it's moving higher, this morning I see it moving higher, and I'm in pretty heavy, so I'm expecting this thing to get moving because I'm wanting it to just continue past, clear this breakout and just let's get it going. If we got something going here, let's get it going. And what happens all of a sudden is, let's say you're 31.40, so I'll set maybe a trailing stop on part of the position, 31.20, 31.15, 31.10, 31. I'm out because I'm looking for some momentum, or I'm down to a very small core position. This morning, leave my desk and I'm in cash. Everything that I had nailed because they were already up, so I start setting these trailing stops. Everything I had got picked off, except ANET is still hanging out. But that, based on that move, I thought it was viable along on this pullback. You can see the volume dry up right here, the voodoo day. So if you buy in here early, you get a nice move from around 71, 72 up to 78 today. I think that's something, like Dr. K is saying, something you could sell into and take a profit, and that's a pretty nice profit because that is, well, about 10%. So you get those sorts of moves very quickly, and you're taking them. And I find myself doing that most of the time. Let's see, the other ones, Twitter, same thing. This is real tight in here. I would think this thing's got to come out of here. Maybe it's going to test the 10-day one time. But now Twitter is, broke down very quickly. It was looking like it was running and pushed me out of the position, and now it's still lower than where I got pushed out. Palo Alto Network, same thing here. It got pushed out here, and yesterday it was pulling back nice and tight, and volume drawing up. This looks okay. It still looks okay. It's trying to turn, so it's something to keep an eye on. But I did get pushed out on my stop, on my trailing stop, because I'm expecting some momentum to develop here, and I'm still below where I got stopped out on all of these except for ANET, GWPH, GW Pharmaceuticals, another one. Started up this morning, looked like it was going, broke. 91 is a trailing stop, boom, I'm gone. And it's now down at 88.38. It's not recovering. And so, that's the sort of garbage you see in this market. And so I think you have to be fast and willing to trade if you've got, I'm going to say anywhere from a 5 to 10% profit depending on the position of the stock. So for example, if you bought ANET off at this level here, now you're at these highs, you're probably getting to an area of resistance. You got a 10% profit or so. And I'll take it. I'll take it when it's 7, 8, 9 and be happy. And then, like Dr. K was saying, you do that over and over again, and you can make progress in this market. And that's mostly why I'm up better than mid-double digits right now and doing pretty well, given the fact that the indexes themselves are roughly flat, I think. Where are the indexes up for the year, Dr. K?
Yeah, well, it's been a relentless uptrend. So, yeah, the averages are... Like they're up about 10% or something.
Yeah, so I'm blowing away the indexes, but that's kind of what this market is all about. So I'm just wondering, everyone can hear us, right? I don't see any IMs. You guys were all speechless this morning. No questions coming in. I'm not missing them here, am I? S&P up 7.47%. Somebody says we are here, the silent majority. So anyways, that's what I'm seeing. And now I'm actually looking at possibly, and I've taken some short positions. I'll show you where. I think LVS might be worth a shot here on this rally. Kind of wedging up, so you're getting into that position. You have a sitting along the line here, so watching here for a break. Green Mountains trying to rally. It's getting closer, ever closer to the 50-day moving average, but now you're coming up in some overhead resistance here. So in this zone here, looks possible. Stock is sort of wavering in here, so maybe that's going to break. LinkedIn, possibly a short up here. There was some news the other day that David Einhorn is short the stock. I don't really know what that means, but you're up in here. You're starting to slow down. I would think a pullback is likely, so we'll just see what happens here. TripAdvisor.
For the record, the Nasdaq's up over 8%, like that.
Yeah.
I guess 8.3%, but the Russell 2000's flat, or actually it's down slightly.
Okay.
So this divergence of which I spoke between U.S. and Europe is also prevalent within the U.S. market.
What's the European ETFs? What are the European ETFs?
Oh, like IEV covers a whole bunch of them. It's a whole basket of
Which
European
one?
ETFs.
IED?
IEV, yeah, and EWU is the UK.
Okay, that's making new highs.
So IEV is about 8% off its peak.
Okay, I see what you're talking about.
While the S&P is S&P is hitting new highs now. So we keep seeing greater and greater divergencies going on.
Right.
So this is it going to be a replay of what happened at the end of 2007, or I mean what happened at the end of 2007 had nothing to do with QE. There's no QE going on, so you got to be very careful not trying to compare these times with any other times, because we are a very, very unusual, unprecedented environment, and QE has shown itself time and time again. We've seen QE in other forms in other markets in other times, and it tends to push markets higher because you're just creating all this money that needs to find a home somewhere.
Yeah, and you see the index is moving. The Nasdaq's basically holding very tight in here, and I think volume is lighter today. What are we looking at here on volume?
Yeah, I think we're a little lighter today.
We're running about 6% below. The NYC is up, but the Nasdaq's pulling in, whereas the NYC-based indexes are up. And so everything's made a new high. People will fret about the fact that there's no volume here, but I think you just kind of blow that off and you focus on individual stocks. So I just watch setups on either side. I notice buying weakness, as the guys on the chat room refer to as BTFD, buy the blanking dip, which I think is a pretty good piece of humor there. That works, and sell the rip, and that's what you do. And like I was saying, when you have 5, 6, 7, 8, 9, 10% profit, you just go ahead and take it. Don't be a pig and just take it. And the stocks will give that to you on some of these setups. So what I find is, for every, say, a Twitter that's not going anywhere, an ANET is working. When a JD is kind of faltering a little bit, well, the grub is coming back, and you have the weakness in here that you could have bought off the 10-day coming into the top of the base here, and that's probably the buy point. Now with it up like this, my guess is going to chop sideways, so you'd sell into that move as you're getting up close to the peak here. But like I said, on this one, it hit my trailing stop, which I think was about 43.60 as it was pushing up to 44, and so I just got pushed right out of it, making a profit. So I'm happy about that. But could the reason for lower volume be because it's August? I think that's a bunch of BS. Why is there higher volume here? Higher volume here. The whole idea of trying to gauge and adjust the volume, or adjust the volume for the seasonality that you're in August and nobody's around. That to me, that's a bunch of baloney. I think there's a ton of HFT algos out there, so I think there's plenty of volume. I don't really see any difference. And I've seen bull markets start in August. I've seen bear markets that see huge volume coming down through July and August. So you really can't make any kind of blanket statement, right, Dr. King?
Yeah, exactly. Absolutely. Just be very careful about not trying to oversimplify. Do simple, but no simpler. And there's a tendency to oversimplify the process, and also the mind likes to create matches where there really are none. We see this in pattern recognition all the time. You see patterns that are really actually not there. So yeah, just be wary about that.
Right. Like once people see an ascending base, they see them everywhere, or when you tell them about that. Somebody says HFT programs create tons of volume. That is true. So, to me, this market is just a little bit funky up here. I don't think I'd be aggressive. What's interesting is last week we're doing the webinar in the morning. I didn't really see that I needed to get involved at that point, but it's interesting. Once the news There was a news about a Ukrainian army or military taking out a Russian convoy, and then later on in the day the Russians come out and say, what convoy? We don't know what you're talking about. And the market rallies back, and then on Monday you're gapping higher. And so you see that sort of resilience by the market, at least on Friday. And so I actually come back in and start getting long on Friday afternoon, and of course you get a nice 3-day move. Now you're a little bit long in the tooth here, and I wouldn't be chasing things. I'd be looking at setups. But the other thing is, when you take a position on the basis of a theory, so let me just use Twitter as an example. My theory here is that if you're going to buy this thing, number one, it should hold the 10-day on any pullback. The 10-day might be where you really want to be buying it. But if it's holding tight and setting up like this needs to resolve itself to the upside pretty quick. And if it doesn't, then I'm gone, and I'll just let it set up again. I don't sit around. Like I said, I got pushed into cash, thrown out some shorts this morning on the bounce back here, and I've got positions out now in Green Mountain, LVS, Las Vegas Sands, LinkedIn, and TripAdvisor, and they're starting to come in. We'll see what happens. But, I could be flipping out of my shorts and going long. I was doing that Friday. Stocks started coming in. The shorts are making some money. But you can start to get a sense as things come down that the market's sort of pushing on a string on the downside, and you kind of feel that there isn't anything there in terms of real selling yet. And so they'll let you just back away and let these things lift, and they come in a better spot to be shorting them. But I think you have to be open to either side of this market at any point in time, and you can't have any rigid views. So, like someone's talking about CMG. Look at CMG on a reversal today. Now, there's a good example of what's happening today. This thing's in a sort of an ascending pattern. This isn't really an ascending base per se. In fact, if I were you guys, I would just blow off trying to find ascending bases and get excited about stocks on that basis, because the chances are if a stock is in an ascending base or any kind of ascending pattern, there will be a pocket pivot somewhere in there that will work and send it higher, and you can just operate on that basis, a continuation pocket pivot, rather than trying to put a label on something as an ascending base. Nevertheless, this is on the weekly chart a sort of an ascending flag, but it's kind of wedging. So this morning you try to come out, it looks like you get a pocket pivot, you're failing, and that's not good. So that looks kind of suspect. Watching, let's see, a few stocks here. Twitter coming in more. Illumina is another one, I think. I like some of these setups here. You can see it's reversing, and it comes just above the 50-day, which is pretty typical. But after this breakout failure here, you come in, find some support, I guess, on this little flag here, and then you bounce up, and now you're getting to a spot where it might become very shortable. Somebody says ascending bases are best seen in hindsight. Yeah, I mean, I think all of that's just BS. Having to classify a base as this or that, and it means something. I think it's all just BS. I think if you stick into pocket pivots, continuation pocket pivots will occur within ascending patterns, and so you can just use those as your buy points. I think using, once a stock is trending higher, using the 10-day moving average or the 20-day as areas where the stock might pull back, and if it gets tight and the volume dries up, I'll often just take a position right at the line rather than waiting for a pocket pivot, and that can work too. I think any of those buying techniques in an ascending pattern are much more reliable than trying to stamp a label on the thing. I think that's all of that to me is just foolish, and it simplifies the investing process to a level that just is not realistic in my view. But a lot of people want that, so. Let's see. Aside from mentioning a few short candidates occasionally, how come you haven't published many SSS in a while? I would say the conflict that I find is I don't want to be running around on our website telling everyone to short this or that when the market's, number one, very choppy because there's more risk to the downside, and I believe that the setups are generally short-term at best. And secondly, a lot of times I'd be in direct conflict with the market direction model signal, but I just find that it's the case in real time that it frequently that just doesn't matter. You just take the positions anyways. But I think a lot of the short selling has been erratic and more short-term in nature, so nothing really thematic. The last thing I think we came out with was Stratasys when it was forming its right shoulder back here, and stock had a nice move. And once it undercut this level, it's coverable. Now this thing might be setting up in a another right shoulder, and I think you can look at a lot of patterns in that light as being potentially in right shoulder rally. So that's basically why. And I don't think it's the question that I always mull over in my mind is how does the market end, in fire or ice? From that old, who is that old, the poet who wrote that poem about how the world ends? Is it fire or is it ice? I vote for ice or something like that. But to me, the analogy to the market is, does this bull market end in fire with a big liquidity-driven blow-off to the upside that tops out and then blows up, or does it end in ice where it just kind of rolls over and slowly deteriorates and freezes up on the upside, and things become very difficult in terms of making progress, and then we just slowly fall into the abyss? I don't know. And so that's why my strategy has been more short-term and taking profits when you have them, anywhere from 5 to 10% more if you get that, and not chasing stocks, looking to buy on weakness, and not really getting locked into a particular frame of reference in terms of bullish or bearish outlook. I would say at any point in time I could be anything, and I could switch an hour or two later. And I find that in this market, unless you're willing to remain flexible, it's hard to make progress. It's not a trend follower's market, I don't think, even though there is a trend, but it's a very choppy and at times halting and difficult trend to play. So it's
and that's the conundrum. I mean, one of the this market definitely is one for the record books, because I'm hard pressed to find another period that's lasted this long with a supposed uptrend. Yet fund managers of all stripes can't beat the averages, which are pretty much relentless to the upside since 2009 in this QE environment. It's one of the very few times where buy and hold. If you'd bought and hold since 2009, you would have been matching the indices, meaning you would have probably outperformed 99% of fund managers out there, if not more, and you certainly would have outperformed all the trend following wizards, all the guys with the best track records that have been doing this for over 25 years. So, it's interesting to be trading in these times, because from these kinds of periods, you get new methods, new strategies. The 620, the crossbow. These are short-term methods, but they actually can be applied once the QE period comes to an end, whenever that is. These new tools can be applied in, let's say, more normalized markets, just like pocket pivots and viable gap ups, which I pounced upon in 2005 after a year and a half of exasperation with base breakouts failing miserably. And these devices, these tools, of course, they're useful in these markets, but they were massively useful in the 80s and 90s, because of course, when I come upon something, I'm going to backtest the shit out of it, and I want to make sure that it's going to work in different kinds of market environments. So these, of course, day trading is not for everyone. It's not really my bailiwick. I just tend to function more on at least a swing trade type of manner. But nevertheless, this intraday getting into and getting out of position certainly has improved my trading overall. And these are tools I'll carry with me into the next market cycle, whenever that is.
Well. Let's see. Dr. K likes bailiwick. Is that British? No, I think I use that term a lot too. So, let's see. Somebody says not being able to watch the market intraday all the time makes it tough. Yeah, I think that's true, because things change very rapidly intraday. So, I mean, yeah, Dr. K, I would say, yeah, the market's interesting and all, but I'm more interested in figuring out how to make money. It may be interesting, but it's not really interesting to me if you can't make money. So.
And it's just infuriating.
But I'm doing very well, and I don't have anything really to complain about. I'd like to be able to build on what I've done so far this year and get to triple digits again. But we'll see. But I'd have to say, since I've been back from vacation, it's been very choppy, and a lot of work to make very little progress from where I was when I left on vacation in the middle of July. And now we're just past the middle of August, heading into September and the fall, which is often a key period for the market as we move into the fall. A lot of action. Market bottoms tend to occur in September, October most of the time, Dr. K? Is that a fact?
Say that again. Market bottoms in.
You get a lot of major market bottoms. At least I'm just anecdotally.
Yeah, well, October
my
is
experience.
October.
Yeah, October. So I would like to see a huge bear market break here, or a bear, say a correction here of like 20%, and then we bottom. Russia attacks the Ukraine, and then Germany attacks Russia, and the Poles move in, and all the Latvian and Latvia, Lithuania, all the Baltic states come flying in, and things just get real hairy, and the market just sells off in a furious downside break. This is my fantasy world here. I tend to think that the next big break is going to be on the downside, because the upside is almost torturous. And where I get a little bit optimistic is in seeing that there are a lot of new merchandise type situations. You can look at, Twitter is new merchandise. Palo Alto Networks is new merchandise. Grubhub is new merchandise. Stocks like GWPH are new merchandise. And there's a number of these other, the Chinese names out there that have been doing well, the JDs, the CMCM Cheetah Mobile, there's a Leju, L-E-J-U, I don't know if that's how you pronounce it, but there's a lot of these new names out there, and I'm wondering, does this mean that there's some nascent foundation of hot new merchandise that might be able to drive some significant upside? It's like, where are the Teslas of May of last year? Where's the Yelps of last August? The Fire Eyes of January of this year? Where are those stocks? They're not really there, and you're not really seeing anything streaking unless they're streaking off the lows of a pattern. You see a lot of that going on, and so it's very uneven, at times incoherent. The ugly duckling situations seem to perform better than the nice, beautiful setups, and then you get weird stuff going on. Like, for example, Cavium, great example, I think. Here's a stock just looking great, viable gap up. Normally a viable gap up starts to work. That thing's got potential to move higher, and you would look for it to do that. But it just kind of flakes out and gives it up, violates the low of the gap up day. So if you bought on the gap up day, you're stopped out. Comes all the way down into the base, the prior base. So it's looking like it's breaking down. Here you got a big volume break, violating the 50-day. Then you just kind of find support in here, turn around, and drift back up to the 50-day, and then move higher. No real volume, and then finally you get this cup breakout, and you have to ask yourself, are you going to buy that? And I would say no. I probably wouldn't, because I don't like the fact that it's coming at the end of a long run. But there's no real buy signals in here. Maybe you'd call that a pocket pivot, but it might just shake you out right away. And then you have like Palo Alto Networks, another one. This thing coming out, it's gapping higher here, and right on that gap it immediately fails, and then it just kind of works its way up. There's no real volume. I think this is the only above average volume day you have in the pattern right here on July 24th, and it's just not going anywhere. It tries to come up, breaks down, and now you get a breakout here, and it's sitting around here. Is this thing going to streak and go higher? Earnings come out in I think September 9th, so who knows? SLXP, there's a buyout rumor here. That's what's driving that. So I'm not a buyer here, obviously. Let's see. Somebody says, let's see, got some more questions here. Somebody makes a comment, HGSI, this HGS Investor Software, has been a valuable tool. Thanks for introducing us. Do you have any advice on how to create HGSI filters for Voodoo setups? No, not really. I don't try and filter for that kind of stuff. I basically just look at my watch list and go through it in real time and see if stocks are trading down and pulling into a logical area of support along a moving average, the 10-day, the 20-day, the 50-day, whatever, and volume is drawing up. So I don't screen for Voodoos or volume dry-ups. And I think trying to screen for them is kind of silly, I think. You don't need to. You just watch your watch list. If you got a watch list, I think right now I have a watch list of 70 stocks. And I go through that frequently during the day in real time, so I can look at real-time charts. And, I can see visually if they're drawing up and setting up. Just screening for the action itself, you're looking for a day where the volume is, less than more than, say, 45% below average. The lower the better. You know, that alone doesn't mean anything unless you're within the context of a pullback to a moving average. So, you know, let's go, and you might find that you're going to pull up a lot of garbage. So I don't really need to go there. Here, all I know is I've got this on my watch list, and it pulls back right in here. There's a volume dry up in the extreme right there. So that, to me, that's where you could nibble on the stock and attempt to go long. RH, plug your thoughts. Well, you don't need to really think anything here. Here's a pocket pivot. If you bought that, you're doing okay, but notice how you're reversing today. So it's just trying to roundabout. You did finally got a pocket pivot on Tuesday, I think. Yeah, that's Tuesday. And that looks okay. But be careful, man. Maybe it reverses. Plug is exactly, well, you just, you know, put but in front of the symbol, and I think that's what you get. I don't see this as being anything to play. So I even tried, I think, buying 10,000 shares down here around 585 or something, and it didn't go anywhere. You get like a nickel move to the upside. Whoopie-doo. It's garbage. When trading,
you got to be patient with this thing because it'll give you, if you look back at the price history, it's only giving you really one clear buy point in the pattern. Well, there's actually, no, I'd say there's two clear buy points. So, you know, you got to wait for the pattern to trace itself out constructively and then offer you a pocket pivot, as it did on February 25th. You know, and it also gave you, it had a little buyable gap up on, when is it, July 15th.
Well, yeah, I think the thing,
those are the only two. I can't see any other, you know, real solid buy points in this pattern. You don't want to get caught buying it on June 18th, even though it looks like the pattern's traced out.
Here.
But if you actually look at it a little more carefully, first of all, it's just barely cleared to 50-day. You know, it was up 17%. Plus, it still needs more work in the pattern. Your chart, you got to train your chart out to see that the 18th of June is not a buy signal. You know, that is not a pocket pivot. It's not proper. But on the other hand, when you come to July 15th, well, now it's got a little more time on its side. You know, when it was when you had this earnings announcement on August 14th, you know that you maybe take a punt on it. You know, as in you put in, you know, 10% of your account, a small amount, because on the idea that, well, maybe this earnings news together with maybe it's got enough time on its side, maybe you'll get a 10% gain off it or something. And it quickly fails, so you reverse your position, and hopefully, you know, with only a 2 or 3% loss. It's going to need weeks more work to actually set up properly. So you're going to have to give it a lot of patience.
Yeah, my other thinking here is pretty basic. It's a $5-6 stock. It's garbage. I think it's just garbage. Maybe someday you'll get some jack because a bunch of dumb retail investors will come after it. And hopefully you're long before that and you can sell into it. But I just don't see how this is really an institutional quality name with any real potential longer term. And if there is longer term potential, this thing will get above $10, and then institutions might start to get more interested. So, but market's kind of pulling in a little bit. Nasdaq's making lower lows, down 4. Trannies are down 15.62 right now at just past 9 o'clock my time, which is just past noon New York time. EXPE, I've been looking at this. It's at new highs, but I'm not a buyer. So I guess if you bought here, you're doing okay. Z, you had to buy it here off the 50-day. Even though it looks like it's not going to hold and there's no volume support, you just had to buy it right there. And if you did, you're up. And I'm not sure what I'd be doing now because there are no real concrete buy points in here. But maybe it just back up to the highs with the market if the market continues higher. But we'll see. RFMD just continues to act fine. It's just trucking slowly. You had a buyable gap up here. Stock held in around 11. It's up, 4%, 5% from there. Nothing spectacular. My tendency is to sell into the move if I buy it either on pullbacks or somewhere lower. But it's moving along nicely. I think they're in the same, are they in the same business roughly as Software Tool or Skyworks Solutions rather? I don't know why I called it that. That's an old name, Software Toolworks. I think it's SWTS or something like that. But anyways, this one is SWKS, and it's just moving higher on lighter volume. So to me, that's wedging action. That looks suspicious to me. I wouldn't be buying it here. I think you have to buy it on weakness, just like everything else in this market. BTFD. Yeah, I like it. Any other questions? So it's already 9:09. I mean, I don't have a lot to say. There's some things trying to set up, but I think you're in an extended position. I'd be more interested in buying into weakness. And then I also keep one eye on the short side, because things I think can change very quickly in this market. And just when everybody gets bulled up and things look really good, they might pull the rug out on you. So, I think you got to run things very tight. Taser, here's what Taser looks like. To me, this is just, the head and shoulders formation. Maybe it's a right shoulder rally. The reason it's rallying is because there's stuff going on in Ferguson, Missouri. And I think it's just a retail rally, and big money's probably selling into this. That's what I think. So I think it tends to be shortable. So I've watched, I think in here you're going to probably see some resistance. So stock making new highs. Get a MACD stretch. Let's see here. I've actually been keeping an eye on this. I've been hitting on the short side. It comes in a little bit, but I think it might be potentially have more downside potential. You like that usage of the word potential twice. Anyways, what else do we have here? Let's see. We already talked about SWKS. I'm just going through some questions here. How are oils looking here? What, you can't read a chart? How are they looking? APC is hanging in there, but yes, for the most part, they've all come down. Here is a group that was leading the market back in mid-May, led the market out of the turn. Stocks breaking out to new highs. You saw this one working. Bonanza Creek, Fang was another one. EOG was another one. I mean, you just go down the list, and most of these oils have given it up. And I think this is sort of a symptomatic of what happens in this market. And I'm not really a buyer here. So, but this is why we talk about the oils as not being a favorite group. But in my view, they're just doing what everything else seems to do in this market. In other words, you see stocks, acting well, moving to the upside, and then they give way, and then they just come in. And there's if you're sitting around with your finger up your nose, you give up all your gains unless you have some sort of idea of what your profit objective is, and you're taking it like we've been talking about. So I'm not really. I don't think you need to be in the oils right now. That doesn't look very good to me. Schlumberger is another one that's like Halliburton, and that looks weak as well. So I'm not really a buyer on these. CRM, probably a short. When do earnings come out? If we hit the 200-day moving average. What's that, Dr. K? You were going to say something?
Yeah, no, I was just saying, I mean, oil's been in a downtrend. Commodities overall are in a downtrend. So, you don't want to be looking for a buy spot in this stuff. I mean, you want to go for the daylight with those few stocks that are actually issuing quality pocket pivots.
Yeah. So the oils don't really. Oh, CRM reports after the close today, after hours. So I don't know if you want to short it. Maybe what's going to happen is it'll gap down or something. GWPH could be seen as VDU as it finds MA support. Well, the volume's picking up versus yesterday, so that's not really what you want to see. If you want to see, you'd want to see the volume drawing up. I mean, you can't really see this that well, but let me try. You see that? This is now higher than yesterday. So volume is picking up, and it's selling through. Let's see, the 50-day is 88.82, and we're trading at 88.84. So we're sitting right at the 50-day. That's not really doing what I would expect. I would expect it based on yesterday's Voodoo Day that it would have come up out of there, and it looked like it was this morning, and then it just kind of fritzed out, and that was all she wrote, basically. Dr. K, have you found any helpful tools to swing trade 60-minute charts?
Swing trade 60-minute charts.
Yes, you found a whole bunch of them. There was a box in your attic, wasn't there, of a bunch of tools for trading 60-minute charts?
No, that was in the garden shed, actually, by the rusty hose.
Oh, okay.
Really, 60-minute, that's not something I've been really looking to do. What I do is, what you can do with stocks is, provided the stock is setting up right on the daily chart, then you focus in on more of the minutia on a smaller time frame. I typically use 5-minute charts, and then I use moving average crossovers. And when I see a critical buy or sell point intraday, then you can go ahead and do that. Get on board the stock on that basis. So these short-term techniques certainly can be useful in any kind of market environment. But of course, in this one, they're more essential than in more standard environments.
Dr. K, gold and silver. QE is flooding the markets, but gold and silver are moving down. What are your thoughts? My thoughts are that gold and silver are moving down. Other than that, I don't really have that much to think about it. What do you have to say, Dr. K? Anything insightful?
Gold's got so many cross currents. It's not really moving down. It's just in the sideways doldrums for over a year now, and you got all kinds of factors that determine the price of gold. So you can definitely overthink the issue with gold, and therefore, on a fundamental basis, gold can be very, very tricky. I think it's far better to use technicals to guide your buying in gold and GLD, for instance. It seems to never fail. If you look at the price volume, say on the weekly basis, it's quite obvious when you have your buy points. And silver, which is of course the more volatile cousin to gold, that too, it's a little sloppier a pattern, but you can use GLD as kind of your rough guide on how to get into both gold and into both GLD and SLV. And right now, SLV as well. It's more volatile, but it's been in a relatively sideways move for over a year.
Yeah,
so nothing to be done.
This has been going on for a while, where you've seen the metals moving lower. So it's some great clue about something. Who knows? Again, I wouldn't be trying to piece together, causalities. There's all this QE out there, and gold and silver are going down. Maybe there isn't. Maybe there's something else going on. Rush to liquidity in these assets. Who knows? But I don't really think it tells you anything. And as long as there's no buy signal in the in the ETFs or in the metals, there's no reason to do anything. Let's see.
Yeah, you got to be really, really patient with these, because as you can see from GLD, it'll give you the buy signal, and it'll be quite obvious. But you got to be very patient, because maybe these buy signals only come, on average once a year or once every couple of years.
Yeah. Can you tell us more about your analysis of the Russell 2000, Dr. K? In the past, you've mentioned it as a sort of gauge for the market health due to how it behaved just before the 2008 crash. Is that still a notable observation in light of QE?
No, it's not. It actually, I'd have to say it's not that notable, because QE distorts everything,
Right.
Most everything. Therefore, what applied in late 2007 with Russell lagging the major indices, I would say you're in dangerous territory if you're trying to create similarities between today's market and any other market in decades past.
Right.
It's just simply because we're in unprecedented territory here. And as I said at the beginning, these times are interesting because what doesn't kill you makes you stronger. And the mid 2000s were pretty exasperating. 2004 was pretty exasperating after 2003, because the breakouts weren't working. And then by 2005, I was looking very closely at, there's got to be another way to skin the cat, because breakouts, I'm not going to be losing any more money off the breakouts. And this kind of environment now, there's Crossbow and 620. Like I said, these are good tools for even if you do have a normal job. There will be times maybe when you can utilize these tools in your favor. At least we can, in terms of when we see potential buy points with various pocket pivot stocks. But again, these times are unprecedented. So just basically don't make the mistake of trying to compare apples with oranges.
Dr. Chair, I have to take issue with this phrase that you like to use, that what doesn't kill you makes you stronger. I think that's actually a massive non sequitur. I mean, I know somebody who was in a car accident, and the car accident killed them, but they're a paraplegic now. So what didn't kill them certainly did not make them stronger.
Very good point.
So,
very good point.
I have to question this analogy.
I have an answer.
What I would say is
when
you survive fire and you come out unscathed, then you're stronger. So I think you have to qualify that, because I don't.
I have an answer though.
Okay.
I do have an answer. I like your example, because I've thought about this quite extensively, and I do believe that everything is what you make of it. In other words, in a spiritual sense, which is the backbone to everything we do. If a person is a paraplegic now, or born or like you have a Helen Keller situation, or the Superman guy. What was his name?
Christopher Reeves.
Yes. It can greatly enhance your understanding, spiritual understanding and connection. We saw that with Christopher Reeves. I don't know about your friend, but hopefully your friend would also find that within. So I think that there never is an end game. I think it just keeps going on. It's up to each of us to determine how we want to play the game. We can prefer to be see the negatives in things and become very pessimistic, jaded, and cynical, or we can maybe use massive setbacks like becoming a paraplegic to I don't know, find the light, for lack of a better phrase. And actually, come to think of it, that guy Koppel, who wrote all those interesting books on trading, Inner Game of Trading. I've read a bunch of them. And Koppel was a top fund trader. He was a market wizard, and he made, he ran his fortune up into, I think, close to, well in excess of 50 million US dollars. And as he says in his autobiography, he became a complete asshole, and he just became short with everything, short with family and friends, and just unbearable basically. And he didn't see it. He was blinded to it because he was just completely wedded to the dollar by that point. And what ended up happening, he says inevitably, is that he ended up losing it all. And that was actually the best gift that could have happened to him, because he was financially a paraplegic, became a paraplegic because of the massive losses and going into bankruptcy essentially, and then finding the light. He says it much better than I can, but he did a lot of soul searching and was able to discover that what he'd become, and maybe it was divine intervention that interfered with the path he was going down. But he's eternally grateful that it happened as it did, and then he was able to get back on track, not just financially, but also in terms of family and friends and just the way he was as a human being. So it's a great story of losing and then finding oneself again, and the market was certainly the catalyst in his progression as a human being.
Let's see, somebody is asking, don't see 360 in facts. What is Crossbow? Oh, here we go again. I really hate to show this, but people who've been around, I've talked about the 620 chart, which is basically a 5-minute chart with a 20-period and a 6-period exponential moving average on it. So it's a 5-minute chart. It's got MACD set up similarly, 620-10 close, and we just use it for intraday signals. You kind of see Taser here is getting a little bit of a cross here on the MACD, and as it comes up, you had I talk about the MACD stretch. But you know what? I'm not going to go into it right now. If you go onto the chat room and people will explain it to you, but you know, it's just a tool we use, and there's nothing magic about it, and I really hate getting into it too often. I just show when I'm using it in real time, and if you can pick it up from there, that's great, but otherwise, you know, I think a lot of people are looking for crutches, and they approach this too much as a crutch, and all it is a 5-minute chart with some moving averages and some MACD, and when they cross and you get confirming crosses or whatever, you can get buy or sell signals, and there are other ways to use it. For example, you get a MACD stretch where the bars here come down. That might be a low, but you know, that's basically that. And it's not in the facts because it's proprietary mostly, and I prefer to just discuss it in passing. So there. Gil, when are you coming to the chat room? When I feel like it. Let's see. Suggestion: just refer people to previous webinar videos for explanation of 620. Oh, that's a great answer. Someone smarter than I am. That's for sure. Yeah, go and look at previous webinar videos, and you'll see it. So, but you know, I just basically showed you what it is. Just look at this chart, and you can see. Here, I'll make it nice and big for you, and you can see all the the moving averages here, the MACD here, and see how some you can get signals in here, blah 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 blah, and so on. So that's that. Anyways, what else we got here? We're almost done here. I think I'm going to go take a nap. Looking at most stocks that were up this morning have come in, and they're staying down for the most part. Palo Alto Network's trying to come back. That looks okay, but market looks, looks like you may have had the fatter part of the move in some of these names. Looking at the ANET, looking at the Grubhub. Although I think those are great looking stocks. I don't think you really want to be chasing them. So, and I would be very nimble here, as Dr. K said. Do you have any final words of wisdom here, Dr. K, before we sign off?
It's a slumberific market right now, as far as I'm concerned.
Slumberific, I like it.
Yeah.
Yeah, I should have just stayed on vacation, tell you the truth.
Yeah, go to the beach, get the last bit of summer in.
But maybe this will be a big market top, and we're going to blow to the downside. I don't know. I think at some point.
Yeah, I mean the Nasdaq.
Go ahead.
The Nasdaq's, since QE started, we've had 4 corrections on the Nasdaq. That's it. 4 corrections. 2 of them have been roughly around 20%, and 2 of them have been 13 and 12%. So that's pretty unprecedented. In this uptrend that just keeps chugging along. And actually since 2013, of course, we all know that there has been no correction in excess of 10%, and on the S&P it's been 6%.
Yeah.
So, but since January 2013, the reason it's like this is because the QE spigot was turned on full. So we're not at Operation Twist, which was not really pushing the markets higher. It was kind of created grinding market situations. We had QE1 and QE2, which that definitely pushed markets higher. You could see it. It's like it's almost perfectly rhythmic to the QE flow, and so might as well enjoy the ride. If you're a buy and holder, you have been probably enjoying the ride, but again, there's better ways to operate even in this kind of market environment than buy and hold, which like Gil showed earlier today. The market averages are up basically 7% on the S&P, 8% on the Nasdaq. It's down slightly for the Russell. Those are not blow your doors off types of percentage profits.
And you've been down. The market's gone to being slightly down. We're flat for the year, so it's not like you're making a lot of progress. I think when you get to this, going back to the gold and silver thing. Gold coming down, you have the oil has been coming down, dollar's rallying, so the UUP, which is the dollar, and that's rallying. So what this seems to be telling me is that interest rates are going to rise, and that's what we're on the cusp of seeing. And I think the market could react adversely to that. But at the same time, I want to be open to the long side without getting locked in a rigid bearish view necessarily. So I'll work it either way depending on what happens. But I think that if that's what this is telling you, bonds are basically, they've been coming in, trying to find some support at the top of this breakout area here. So dollar rallying, bonds coming in, gold coming in, silver coming in, oil coming in. Are we at the cusp of interest rates rising? And if that starts to happen, what happens to the markets? And I think that's something you have to be wary of. And so if you are taking long positions, and I think there's some justification for doing so in certain names when you get to the right spot, you can test them out, but I would keep very tight stops. And the closer I can buy something to a decent reference point for a downside stop, the better, and I prefer to operate that way. When things get extended again, you start cutting back or selling. What is the title of the Michael Covell autobiography?
No, it's not Michael Koppel. It's Koppel, Koppel.
Yeah.
And it's his full name's Robert Koppel, and he's written a number of excellent books on trading. But the one I found most illuminating was his. It's basically an autobiographical account, biographical account of his story from rags to riches back to rags, cool. and then making it back, and actually being given that second chance. And I think everyone should read the book because it keeps the ego in check to know that this is what happened to this guy. It could happen to me.
Yeah, I mean, I know it can happen to you. I mean, I've had periods where I've drawn down pretty good over the years, and I've been doing this now, 25 years? I think we're both about 25 years in this business. But
yeah.
Somebody asked the final question, when is the book finished? It's not finished, so it'll be finished when it's finished. So I'm just writing it. We're just progressing through it as we can, and it'll be done when it's done. I would say expect early 2015 publication date is what I would expect. So that's about all I can tell you right now. Still writing it. It's taking me a little longer than we thought, and so but I'm trying to make sure it's a quality book and that it does serve as a very useful replacement for the 2004 book that I wrote for Bill O'Neill, How to Make Money Selling Stocks Short, which is still a very strong selling book. Even though I guess some people tell me the reviews, some people like to rag on it, but people like to rag on stuff, so I don't really worry about it now. Just write the book, put it out there. If it sells well, our books sell well, because if they didn't, Wiley would not be asking us to do a third one. And what people say is what they say, but I think a lot of times it says more about them and what they're able to get out of a book than what you might get out of a book. So I think reviews in general are useless for the most part. And that comes to like movies and restaurants as well. You got to go figure it out for yourself. Anyways, that's all we got, you guys. Excuse me. We'll catch you next time. Take care.
So long, everyone.